Hi guys, this is Wave 618. It's the 20th of December 2018 and we're approaching 4 p.m. GMT. Alright, so this is an update video on Bitcoin, and first of all just want to apologize. I uploaded a video earlier today and there was a bit of a mishap because I changed the screen settings, and as a result it kept replaying the intro rather than showing what was on my screen. So this is a re-upload. I decided to do it again just because I thought it was a really good video actually. I was very happy with it and it covered a lot. But I've got a bit of time on my hands today, so I'm very happy to re-record it. So it might take another half an hour or so, but let's do this. Alright, so so what we're going to talk about first of all is how, as I say, for my anyone new to my channel, I'm going to explain my count, my wave count from the Genesis, or from at least the all-time high, which is $20,000. So the count that I've been looking at is this WXY count, and just to go through that quickly, so the W is a 3-wave down count, and then the X wave, this is a little bit harder to see, so I've actually drawn it as this triangle here, A, B, C, D and E, whereby you've got a descending triangle with descending highs whilst your base is down here at this flat level. You can see the B wave doesn't quite reach the base of the triangle, but it's important to remember that this is not a textbook triangle, and you rarely see textbook scenarios when you're using Elliott wave. So the actual rules with regards to a triangle is that both sides of the triangle, that's the top side and the bottom side, need to get hit at least twice. And you can see the bottom of the triangle gets hit once here, twice here, whilst it's been hit 3 times at the top. So it certainly meets the criteria for the triangle. And so yeah, that's how I've made my count for the X wave, being that triangle. Now the Y wave starts here and comes down to here. The question is, has it really finished? And that's what we're going to be addressing in this video. But so far we have certainly seen 3 waves down, with this being the first wave, second wave and the third wave, which is typical for a Y wave to have. So that's the 3 waves down. Alright, so really what we're going to look at in this video is, because there's a lot of questions going around, has Bitcoin made its bottom at this level here? Could it come down, make another low, or could it come down a lot further? These are the questions that I hear a lot at this moment in time, so we're going to address that. So first of all, I've explained the Elliott wave count so far. The reason I was looking at this low here as being the low around 3200 was because of this Fibonacci extension of wave W. If we extend W and extend that from the beginning of X, sorry, the end of X, which is here, we get around that. Okay, so it's not drawn perfectly, but if we really zoomed in, we get around 3200 here. It's showing around 3300. So that was how I was forecasting where this Y wave would finish. So that's looking at it from an Elliott wave point of view. Now once you've got your first 2 waves in an Elliott wave count, so this is our W and our X, we can then plot a pitchfork. Now I will always like to look at pitchforks or another form of assessing time, and the reason for that is because if you're using Elliott wave in isolation, all you really the only real thing that you're taking from the data on the chart is the price. So it's essentially a Fibonacci application strategy, Elliott wave, where you're looking at price, and it has no regards for time. And for me, time is half the information on the chart. So you've got price and time. These are 2 really important factors. So for people who, I really don't understand why people would just follow Elliott wave. I think another indicator is required as part of your strategy if you're going to trade the charts accurately. So I've experimented with lots of different ways of analyzing time. You can use pitchforks. Other means of assessing time are through channels or trend lines, Gann-Fan or Fibonacci time. And I do use Fibonacci time from time to time, but yeah, so there's many different ways, but I find pitchforks to be superior. They're excellent. They really have a very good hit rate and seem to be superior to the other forms of time analysis. So just going to pull up a pitchfork here. So as I say, Once you've got your first two waves in, you can plot your pitchfork. So the first pivot goes here at the beginning of the count, second wave at the end of W, and so second point at the end of W, and then third point at the end of X. Then it draws the lines out for you. You can see here our upper median line held pretty well up until the final point, then it kind of overthrew a little bit, but then came crashing back down, so held strong. And you can see that it actually failed, although it broke the line, this upper median line, it failed to go above this high here, if you can just about see it. So again, it wasn't any real cause for concern when it broke this line. Came right back down, and then it went all the way to the median line. A little bounce before then testing the median line again and actually going through it, and now we're back above the median line again. So these lines are being respected here, so that's why it gives further validation really for this Elliott wave count. Alright, so that's just looking at it from an Elliott wave and a pitchfork point of view. So those are the two components of my analysis that I'll always use, but the other one is order blocks. So we're going to discuss that also. If I can just take off and tidy up the chart, we'll take off the pitchfork. So order blocks are these rectangles that you can see. And the way I draw my order blocks is by looking at the consolidation that precedes the impulse. So here you can see there is a consolidation here that precedes this impulse. Now there's several places where there's consolidation. I'm focusing on this one here today because this is the box that we're in right now. But previously I was looking at this consolidation here that led to this impulse here, and you can see this acted as support many times. So here, 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 and then we finally breached it, retested it before coming down lower to our next major order blocks, which was here. But let's focus on this one. I'll explain how I drew it. So my color coding for these order blocks, which is explained in the description for this video, so it's a red order block, which means it's drawn on the daily time frame, which we're on right now. So essentially it's marking out the consolidation, which really should include all of the data from here down to here, but I will actually fine tune the box to really focus on where the majority of the consolidation is. Now, so I've actually wanted to focus more so on this area here. So technically you could draw your order block like that, because this was the final real bit of consolidation that led to this move up. And you can see this level here acted as really good support for a moment before it came down lower. But I decided to adjust the order block, so it is more of an art than a science. You have to include key data. I felt like this daily close down here was significant, so I've included that in my order block. And you can see this, it was the final really big red candle that then preceded all of this major move up. So it's a very significant close, this level, and you can see now this level is acting as support. Okay, whether that's temporary or not we'll discuss in a moment, but I'm not too surprised why this has acted as good support. Okay, so far what have we done? We've covered Elliott wave, pitchforks and order blocks, which are the main analysis that I will use when trading. So I use Elliott wave really to get a gauge of sentiment. Reason being, it tells us if we're seeing an impulse wave, it means that we're going in the direction of the trend. If we're seeing a correction, it means that it's a temporary pause in the market and we're likely to continue in the opposite direction soon. Pitchforks really incorporate time, and order blocks are fantastic. The reason being is because price really respects these historic price levels where there's been previous consolidation due to a lot of orders being made. Bulls and bears will often defend these levels significantly, and so you often find that the price bounces off these levels very, very nicely. Alright, so yeah, that's the three components of my analysis. Now, what we're going to look at is, so I've looked at it on this time frame here on the daily. I would actually like to zoom out and look at it on the weekly to explain whether this has retraced enough or not, because obviously we've gone up to $20,000, which is a very high level. It was a parabolic move up that we saw in Bitcoin. You can see it's a parabolic move, and this is even on the log chart right here. And so the question is, has it retraced enough? So let's address that right now. So best to look at it on the weekly chart so we can see all the data. Now, I did address this in my previous video that I made earlier today, that unfortunately the Mt. Gox data, the BTC USD Mt. Gox data, I can't seem to find anymore. I'm not sure where it is. I do think it's a little bit sneaky that they've removed it, because right now it would be an excellent time to have that information, because it gives us an idea where we can start our Elliott wave count from, because you should always start from the genesis. But good thing is I've been tracking this for a long time now, and I do know what the Mt. Gox chart looks like, and I do remember it starting around in August 2010. So what I've done here, because you can't start your Elliott wave count here in 2011, or the data starts from August 2011. You can't start your Elliott wave count here. It will be completely inaccurate. You'll be starting, part way into the data, so the sequence of the count will be completely wrong. So you've got to start from the beginning, and that's omitted here. But as I say, I remember that it started in August 2010. Now, it's hard to plot the Elliott wave count, but what we can do, we can use Fibonacci time, because we can plot it from August 2010. Now, this is a 1 year period here, and you can tell that because if we just draw from August 2011 through to August 2012 to there, so that's 1 year. And as I say, we want to go a year back to August 2010. So to find out where that will be, because obviously the bottom of the chart doesn't tell us, we just go a year back from August 2011. Yeah. So basically, I've already drawn it; it's already there. So we can use Fibonacci time from here. Take it to. Okay, first of all, let me take that away a moment. First of all, my Elliott wave count up to here was 5 waves. I believe that was 5 waves completed. It was really, really obvious on the Mt. Gox chart. On this chart, it's not so obvious, but it's really obvious. What we saw was a parabolic wave 1 came down, retraced at least 78.6%, a parabolic wave 3, which again retraced 78.6%, and then a parabolic wave 5, which took us up to the 2014 high, and then we retraced. Then, so that was a wave 1 and a wave 2, I believe. Now, the question is this a wave 3 and a wave 4? Now, I don't think that is the case, because I see this as the only real parabolic move up in this wave 3. So I actually think this is a 1, 2, 1, 2. So this is just the 1, 2 of the wave 3 is what I'm saying. So we've got a very long way to go up. That's what I believe. So that's my favorable count. So this is a 1, 2, 1, 2. And this second 1, 2 is just part of the higher degree wave 3. Now, from a fib time point of view, if we just plot that from the beginning, so August 2010, take it up to the top of what I've counted as the major wave 1 at the top of 2014. Now we can see it retraced. How long did it take to retrace? It came to around the 0.382. Basically means that this, from the time from here to here, is 38.2% of the time from here to here. So all the time it moved up, it took about 38.2% of that time to finish its retracement. Okay, and that's quite typical. You'll often see that with a correction. It will typically take about that amount of time, and you can see it wasn't until about 61.8% of the time had passed that it really started to make its move up. Yeah, so you can see it found its bottom, went sideways, and really started to move when we went past this 61.8% level. Okay, now that is interesting. Why? Because we can now look at this and we can see if this is the start of our move from $150 to $20,000. Let's see how much time has passed. So this is the time it took for the impulse move up. Okay, now the 38.2, we're very, very close to it. very, very close. And in fact, we're on the weekly time frame, so we have to be careful. It's telling us around the 21st of January right here. When I've zoomed in and assessed this on the daily time frame, that's the kind of time frame I got. It was around towards the end of January, beginning of February. So that would tell us when we're at the 38.2. What I'm trying to say here is, from a time point of view, it has retraced for a long enough time. Don't forget, we're in a bullish market, and I believe that this has retraced a sufficient amount of time right now. Okay, so that's looking at it from a time point of view, because the big question that we're asking ourselves right now is, has it corrected enough? You know, we've gone from $150 to 20,000, and we're currently at around 3,000. Has it retraced? Or sorry, we're at 4,000 right now. Has it retraced enough for this big move up? Now, from a time point of view, I'm quite happy with the amount of time that's passed. Okay, so the other question is, from a price point of view, have we retraced enough? So, first of all, Bitcoin, as I say, if you've studied the Mt. Gox chart, you'll know that after a big parabolic move up, it will retrace at least 78.6% or up to 86.6, which is the next fib retracement level. So if I know this isn't the bottom here, this is at around $2.50. The bottom may be at $1, but when you're dealing with these big numbers up to, up to 1,200, it won't matter where the bottom is, as long as you're only $1 or $2 apart. So if we draw our retracement, you see we've surpassed the 78.6 retracement here, and we're very close to the 88.6. We didn't quite hit it, okay? So we're somewhere in between. Now, just to make my point, it doesn't matter where the bottom is exactly to the nearest dollar. So we're plotting at this bottom here. If we were to bring it down to where $1 was, it doesn't really change. We're still between the 0.786 and the 0.886. I can move this around and keep an eye on that 886 level. Doesn't really move. Okay, so it doesn't. What I'm saying is, we are certainly the 2014 crash, which was due to the Mt. Gox crash. It retraced just over 78.6%, which is very, very typical for Bitcoin. Now, let's apply that to what price is doing now. So if we again use our Fibonacci retracement, plot it from the beginning here, take it to the top. Okay, expand that so we can see it a bit better. Clearly at 40, it should be around 4,300. The 0.786 was established, so we've breached that. We've made our way to the 0.886. We haven't quite reached it, and the question is, will we reach it? Personally, I don't think we have to. Once price goes past 0.786, I'm quite happy that it has retraced a significant amount, a sufficient amount for a Bitcoin retracement. So I don't really see any reason to look for a large time frame short on Bitcoin once we've gone past the 0.786. Certainly there may be intraday trades, but I don't see any long time frame trade really for shorting Bitcoin. We've retraced 78.6%, and we've actually superseded that quite significantly. We're at we reached 3,100, and we're almost halfway between the 0.786 and 0.886. So yes, potentially it could come down and test this 0.886, which is at around 2,400, so keep that level in mind. That could potentially act as support if we break down further. So basically what I'm trying to say is, from a time and a price point of view, I believe that we have retraced a sufficient amount that would justify a bullish move starting to develop. Now, of course, we're on the weekly time frame here, so don't get too hasty. The move may start in a month or so, but it's retraced a good amount, because a lot of people are saying, look, Bitcoin went up to $20,000, it hasn't retraced enough. I don't know what they're basing that information on, because it's retraced a typical amount for Bitcoin. It's retraced 0.786. Now, yes, it is a very speculative asset in the sense that it's not widely used Bitcoin or blockchain, but it's very clear to me, and I think it's quite obvious, it's going to be widely used, and Okay, it's not got any major intrinsic value, but everyone knows that it's needed, and the fact that it's needed tells you that it should really be highly valued, and that's going to prevent it, retracing too far. Why should something so spectacular retrace more than 0.886%? So from a retracement point of view, I'm quite happy from a time and a price point of view. So I'm just waiting for a bullish sign, and we'll zoom in shortly and just discuss why, whether or not we've seen that bullish sign just yet. Alright, so that was zooming out on the weekly. Let's go back to our daily. Let's tidy up the chart a bit, take that off. Okay, so I explained why I was looking at 3200. I've explained that I'm not looking for any major move down from here. Now, so what's left to discuss really, is this the bottom or could it come down further? Right, so in order to look at that, we need to zoom in. So this is our final wave, this Y wave. So it's made up of 3 waves. So this first wave, and then second wave comes to here. This is our consolidation, forcing our third wave. Now again, I would use Elliott wave, pitchforks and order blocks to analyze this. So using Elliott wave, this is our first wave here, comes down to here, and then, as I say, the third wave should be extended from here. Let's make this a bit larger. And you can see we've hit the 1.382 almost to the point right here. Okay. Now the question is, could we come down to the 1.618? That's certainly possible. Again, it's around that 2400 level or 2500 level, where that was the 0.886 of the big move from 150 to 20,000. That said, you could argue that this 3 waves down was first wave, second wave, and this was all the third wave. So you could extend it from here. But yeah, that's not looking as good, to be honest, because we've gone past the 1.618 already. So yeah, I think it makes sense to include all the data up to this point as the second wave. So first wave, then it looks like a triangle, A, B, C, D, E, consolidating pattern, converging pattern rather, and then yeah, we could come down a bit further. Certainly this 3000 level could get tagged. So that's what we've got to look out for. And could this be the bottom right now? Well, at the moment I'm not banking on it, to be honest, because if we just apply volume, usually you get a real big spike in volume when the bottom is achieved. And I can see the high volume is here, and then we've seen declining volume. So you'd want to see price going up on higher volume rather than declining volume to call it the bottom. Also, I'd expect a lot more media attention when the bottom is called. So at the moment, again, using Elliott wave, this could all be a corrective picture, looking like a running flat. So if we zoom in, let's go on the hourly. This could be a running flat. This is 3 waves up, 3 waves down. So 1, 2, 3, 1, 2, 3, and then this looks like 5 waves up, 1, 2, 3, 4, 5, and you can see the Fibonacci relationship between wave A and wave C is a 1-to-1 relationship. Just take that off. So just to make it clear, the way I'd label it is A, B, C. So it's a running flat, and the wave count is 3, 3, 5. So there is, so from an Elliott wave point of view, there is resistance at this level, and you can see we've reached the top of this daily order block right here. So if we go on the daily time frame, we've reached the top of the order block. So again, further resistance from an order block point of view. And then what's the other indicator that I use? So it's pitchforks. So let's draw a pitchfork. So I've got that prepared already. So it should be this one. So again, this is really nice. Look how price bounces off these levels. So you've got your first wave, second wave, third wave. Now when you using your first two waves to draw your pivot, so first pivot, second pivot, third pivot, then it gives you your lines. Look how nicely we went all the way through down to the lower median line, retested the median line before again testing the lower median line, little bounce, lower median line again, found a confluence of support with the bottom of the order block, as well as that Fibonacci extension where wave Y was a 0.382 extension of wave W, and since then we've come up. Now again we've got confluence, we've hit the median line acting as resistance, we've hit the top of the order block acting as resistance, and then we've got this ABC completion where C is a one-to-one relationship with wave A. So that's three different indicators all supporting this as being resistance, which is why I certainly wouldn't be long at this point. From an intraday point of view, there is an opportunity, I believe, for a short, perhaps with a target down to at least the lower end of this order block. If you just wanted to sit on the sides, so another way of looking at it is, I would look at it is, if I did want to go long, I'd wait for this to breach and then wait for a retest. So just going on the hourly time frame, it would make sense. There's no point in going long now. There's resistance on so many different indicators. So that's Elliott wave, order blocks, and pitchforks all showing resistance. So, and where you can see it's a spike here. So you need energy to break a significant level like this. So it needs to consolidate for a long time before breaking it, if it is going to do that. So personally, I see it, or I'm trading it as a short-term short with a relatively tight stop above here, around here, and I'm looking for price to come at least down to the base of the order block. I would not be surprised if it tested 3,000. That's what I'm expecting right now. I'm expecting us to test 3,000. Why 3,000? So just zooming out, it's a very obvious level that everyone's looking at, to be honest. So it's one of these SR flips, which is basically it was resistance here and then support here. A very obvious level of significance. So I wouldn't be surprised if price, was magnetized to this level and came down. So yeah, that's what I'm looking at. That's what my preferred count is on the shorter time frame. That said, it could be invalidated if we break above this order block, and then if I were to go long, I would be waiting for a retest of the order block at this level around 4100, and the next target would be the upper median line. But as I say, I don't see it being too bullish, just because the volume here at the bottom I'd expect to be higher. I don't see, there's an argument this could turn out to be an inverse head and shoulders, with this being the left shoulder, the head, and then the right shoulder will form if it comes down again to here and then go up. But that doesn't really make sense to me, because as I say, the head should have the highest volume of higher volume than the shoulders, and you can see here the left shoulder has higher volume than the head. So it doesn't really make sense to me. Which basically means that it doesn't look like a reversal point, because the left shoulder has a higher volume than the head. Alright, so that's looking at it from on the shorter time frame now. So that's what I will always do. I'll look at it on the larger time frame, apply Elliott wave, pitchforks, order blocks. Then I'll go in on the shorter time frame. Again, I'll look at pitchforks, order blocks, and Elliott wave. So for me, there's an opportunity for a short right now. If we zoom in on the 15-minute time frame, it's kind of hovering around, not really making any, it's just consolidating at the moment. You can see, look here, we've tested the order block 3 times. Yeah, very clear resistance. Now it's coming down, looking a little bit corrective, or it could be like a 1-2-1-2 before it comes down further. So as I say, for me, I'm short-term short here. Alright, so what have we discussed? So we've discussed about the macro picture on the weekly time frame. We've discussed the current wave count from $20,000. down to here. And yeah, the next levels of support I'm looking at are 3,000, and the next level would be around 2,500 or 2,400, where that 88.6% retracement of the move from $150 to $20,000 was, which fits within this order block here. You can see consolidation here, that around this level is very significant. Right, probably this level here to be precise, 24.22. Yeah, we've got a Fibonacci level there, we've got an order block there, and from a pitchfork point of view, it could maybe test the lower median line around that level, potentially. But Fib time suggests that, as I say, we've almost reached that 0.382 of the whole move up to $20,000. We're fast approaching that now. So that was towards the end of January, so about a month away. So that's fast approaching. So certainly there's no reason for any long-term short position here, in my opinion. And if you're going to go long, I would not get in at this moment. We're going into resistance. So yeah, it's not the time to go long, in my opinion. But yeah, that's pretty much it for my analysis on Bitcoin for now. Yeah, just will add that I'm going to be uploading my course, which I know I announced a while ago. It's been a little bit delayed, and I apologize for that. It's been a few technical difficulties with the platform that I'm actually going to upload it on. It's a very professional platform, really nice to use, so I'm quite excited to hear your response to that, as well as the course in itself, which I've spent probably the best part of the last 6 months on. Initially it was designed to help a bunch of friends out so that they could trade alongside me, so I've really gone into detail with it, making sure it's very clear. And if you want to get an idea of my trading style, check out my Elliott Wave tutorials, which is in the description of this video. I'll give you a sense of my teaching style. And because of the delay, I'm going to release a free module from the course. Again, you'll get a further sample of my teaching style from that. So it'll be a PDF really, just to give you a sample of what to expect from the course. But that's all going to be coming out very soon, before Christmas. Certainly I can't see any reason why it should be any later than Christmas, so exciting times. And I really do think that will really help you with your game, your trading, whether you're new to trading and you want, so it's designed to help people who are entry-level traders all the way through to experienced traders who want to polish off their game. So, and the main three aspects that I will look at are Elliott Wave pitchforks and order blocks, but in order to understand that, you need to understand a hell of a lot about trading, which I will go into in detail. Everything about momentum oscillators, volume, patterns, candlesticks, it will all be covered. But really helping you to understand how these three components that I use, which are pitchforks, order blocks, and Elliott Wave. Why do I use those? That I believe they're three non-conflicting indicators. Elliott Wave is giving us a great lot of detail about sentiment, telling us, are we in an impulsive move with the trend, or are we in a corrective wave against the trend? But it doesn't take into account time. For that reason, I use pitchforks, which I believe is superior to other markers of time, such as Fibonacci time, Ganfan, or channels. And then order blocks are what I really like to place my trades off. Why? Because the levels get hit almost to the cent. They really are excellent, especially if you're trading retests of these significant levels. So yeah, that's the idea behind the course. Going to be coming out very shortly. Because of the delay, I'm going to treat you to that free module, so look out for that soon. It's going to be out before Christmas. I'll make it very obvious. I'll be posting information about it on Twitter, and I'm going to make sure it's very, very affordable, because the idea is I want you guys to be using my analysis, and at the end of the day, the more eyes you have on the market, the better. So hopefully we can share our ideas together. That's the way I'm looking at it, because I only have one pair of eyes, so that really limits what I can see in the market. So yeah, so we've got that to look forward to. Anyway, gonna wrap it up there. Hope you've enjoyed the content. That's my short-term and long-term views on Bitcoin. Let's see how it plays out, and I'll be updating you soon. All right, take care, guys.